Hi guys, this is Lee with the Market Sense for the week of November 12th, 2019. Charts in this presentation are provided to us by Gettess and come from their Trade Navigator software. And this is weekly bond market chart. And you can see we've had a fair amount of weakness here, and last week broke down below previous swing lows and, started looking a little ugly. Now this bar right here is what I like to call an exhaustion bar, or at least potential exhaustion bar. A lot of times when you get a fairly large range bar and it closes right down near the low, that sort of means they've run out of sellers. Everybody who wanted to sell sold this week, and this week will go back up, at least for a while, and possibly reverse back up. Now, if that's true, we should be looking at them at least getting to the 157.22 area. That's this lower moving average. And I actually think there's a good possibility they could get up here to the 159.08 area. The next target on the downside is around 154.13. That probably shouldn't come into play since this low has gone back down to the highs of this sideways that they broke up from. So if they're going to rally from here, they probably shouldn't go down to support first. They should probably just head up. And if they do head up even just back to this 59.0708 area here, that might be a bad sign for stocks. I don't cross-pollinate, monitor one market to trade the other, but it could have a negative impact on stocks if they rally, as they look like they might. Of course, the momentum indicator still looks really bad, so if they just continue down, this is pointless to talk about. But if they do rally up, it could be bad for stocks. And let's go look at the S&P. You'll see what I'm talking about here. This is a market clearly going to new all-time highs yet again, but this is a rather unusual price pattern. We have stayed well above even the upper moving average for the last couple weeks, haven't even come close to it as they drive higher. And yet just saying that they're driving higher is kind of hard to say, because that much momentum that they can't even get down to that average. And yet look at the ranges. These are probably the smallest weekly ranges that you can see on the entire chart here. And that's kind of unusual for a market making new all-time highs. You would expect there to be some enthusiasm and maybe some, excited buying coming in. That's not the case. Now, that doesn't mean that they can't go further up from here, and I'm certainly not calling a top. I don't want to mislead you. But being the volatility this low, it would take very little selling to get them to drop fairly hard. So I just think this is sort of a risky position. If anybody is long stocks here, I think you have to understand there's a fair amount of risk of a substantial break at this point. Not really something we could sell against, but just bears being cautious about. The upside target this week's around 31.05. They've only been to 02 so far. It may not get there. It's not really resistance when it's a new all-time highs. And the support this week to continue the trend up is still in the 30.62-63 area, and they haven't been down to that yet. So nothing bad's happened yet. I'm not making a prediction that it will. But as long as they hold that support, they still have the potential to just drive right back up. But I think a move down to the middle moving average below 30.50 is kind of looking like it's a little more likely, and I wouldn't even expect that necessarily to hold. They could break substantially from here. Now again, if they hold this upper support here in the 30.63 area, well then they're still strong, and don't be a fool, don't step in front of them. But the highs that they broke out from you can draw a line right across the chart here. It's roughly, I don't know, what's that, 30.20 area roughly. Boy, it wouldn't surprise me to see them get back down there in a pretty fair hurry. So I just urge caution, not looking to just sell them, but boy, it wouldn't surprise me if we see a little downdraft here. So that's what we've got for you today. I hope you can find something profitable to get yourself in.